This strategy wins 46% of the time and still makes me money. And as you guys can see on screen here, this system is the liquidity run setup on EURUSD. This is the same strategy I backtested in the previous video, so if you guys haven't seen that, definitely check that out. As you guys can see, I have all the data here, accounting for almost 1,000 trades tested on this setup, also denoting the session times, the entry times, and even different entry types. But before we dive deeper into the data, I'll give you guys a quick breakdown of this strategy. Of course, we're going to need the fib tool with these levels here on the screen. The 1 level for the high of the candle, the 1.3 for the take profit, the 0.8 for stop loss is the case of buys. And for the case of sells, we need the 0 for the entry, the -0.2 for stop loss, and the -0.3 for take profit. And of course, the trade on both sides will look like this, just so you guys can have the visual representation with a 1.5 R take profit. Now keep in mind this 1.3 level is only for a 1.5 R target, and of course throughout the data, as you guys can see here, I denote the total RR rands. So if we decide to collapse at another RR target, all we would have to do is adjust this fib level here on both sides. And of course, once the daily candle closes, we want to let price either run the high or the low within our session hours, which is going to be London and New York times. And one thing to note, if we don't get an entry within the next daily candle, we are not taking a trade for the day. And of course, all these setups revolve around the daily time frame. You're just checking the charts once a day for a few minutes, taking your trades. That is it. Now that we have an understanding of the system, let's go back to the data. And as you guys can see here, we have everything on this sheet. And what I've done is put this in a Google Sheet document so we can observe all of the win rates at each given R. And what we're going to do with all this data is plug it into a Monte Carlo simulator just so we can see how the system actually plays out at each given R. But just a quick rundown, at 1 R we have about a 56% win rate, which averages about 0.12 R per trade. At 1.5 R we have about a 46.5% win rate, averaging about 0.163 per trade. And at 2R we have about a 39.2% win rate, averaging 0.177 per trade. And this number here might stand out to you guys, but of course with a lower win rate, we're going to experience more drawdown, which does affect how the account compounds. And we're going to see this on the Monte Carlo simulator. So what we'll start off doing is playing with the numbers at 1R. So we'll come here and we'll denote a 56.1% win rate. And keep in mind, we're taking about 12 trades a month, and the take profit stop loss is going to be about 1 R. And we'll run the simulation for 12 months. Okay, awesome. So what you guys can see here, this green line denotes the best case scenario. This blue line here denotes the most possible scenario, which is really what we're going to keep our eye on here. Of course, self-explanatory is this red line here, and it is the worst case scenario where the strategy is performing way below the true win rate, which can happen. It's not probable, but it's important to consider when you're about to deploy capital and trade a system. But anyway, let's look at the most possible results. We can see about an 18% account growth within a year, experiencing a maximum drawdown of 10%, which is not so bad. And this was performing a little below the true win rate at 54.9%. And as we can see, the true win rate is about 56%. And in the best case scenario, it is performing way above the true win rate, which again can happen, at about 71%, with a maximum drawdown of 3%. And with this worst case scenario, we have a maximum drawdown of 20% with a 45% win rate, and we were down about 11% on the year. And this is the worst case scenario. But again, we're just going to keep our eyes on this most possible scenario. So let's go ahead and double the total months. And we can see here, we have now about 41% growth on the most possible outcome. And this is with 1 R management. And keep in mind a 16% max drawdown. So what we'll do now is we'll come back, we'll change this back to 12 months, and we'll do the data with now the 1.5 R win rate at 46.5%. About 12 trades per month, and then we got to change this to 1.5 R. Go ahead and simulate. And as we can see, we had about 18% account growth. And in the worst case scenario, we were actually down 20% for the year. In the best case, we were up about 65% on the account. And this is what it's like to actually trade. You're gonna face periods of drawdown, you're gonna face losing streaks, and heck, you might even have a losing year. But that is the truth about trading that none of these gurus are fucking telling you, is that trading is not a straight line up. It is literally this, what you're seeing on screen. It is a period of winners, it is a period of drawdowns, and there's periods of when the strategy is performing way above the true win rate, i.e. this best case scenario. There's instances where your strategy performs right at the true win rate, which is gonna be your most possible scenario, and there's times where probability will not be on your side, and the variance will show way below your true win rate. But let's see what happens when we double the trade duration now to 24 months. We can see here, now we went from being negative on the worst case scenario to being up 4%. And that is the worst case. That is if the system is performing at a 39% win rate, which keep in mind, we have about almost 47% win rate. And we face a maximum drawdown of 18%. Anything below 20% is always good. So even with the worst case scenario, that is pretty good to see. Now let's come over to the most possible scenario, a max drawdown of almost negative 13%. Which again is really healthy to see, and also a 40% account growth within the 2 years of trading this system. And that's with 1% risk, only trading, only checking the chart once a day with zero analysis, zero discretion. You're simply showing up, clicking a few buttons, and letting probability take care of the rest. It's also important to understand, as a trader, our job is to extract capital in the markets over a long period of time. Not to trade a strategy, blow your account, and then give up. It's to keep you in the game, keep you compounding, keep you building your wealth. And once you can adapt this lens, you can test any system, look for any inefficiencies or edge, and apply it to the markets. And what I've found best when it comes to trading is to simply trade with little to zero discretion. So this way emotions are completely out of the picture. And what we'll do now, we'll actually run this simulation again over 24 months, just so you guys can see the difference in variance. And of course, in this simulation, we're actually down 20% on the accounts in the worst case scenario, which is very important to consider. In the most possible scenario, we are up 42% on the account. And of course, in the best case scenario, we are up $140,000, which is over double on the accounts. And we'll run it one more time. And as you can see in this simulation, we're about break even in the worst case scenario, up 34% on the most possible scenario, and up over 100% again on the best case scenario. But let's go ahead and now run this for a total of 3 years now, to see what that worst case scenario looks like. And as you guys can see, we're still down 5% on the worst case, we're up 81% on the most possible case. And the best case, we're up over 200% for a total of 221,000. That's simply showing up to the charts every day for a few minutes and executing on your setups. And what we can do here is actually play with our risk here. So if you were to risk 2% per trade, you can see on your best case scenario, you have absolutely crazy growth, but keep in mind, you will face higher drawdown periods. Of course, with the most possible case, again, you're up 200%, but you're going to be facing more drawdown the more risk you take on. And in the worst case scenario, this system is about break even. Of course, you guys might see the worst case and it might be a little frightening. Well, Ramtin, this system doesn't work. Why are you showing this on YouTube? Well, the reality is this is the worst case scenario. This is where your strategy is consistently performing below the true win rate. This is going to be your 99th percentile of outcome, which keep in mind the most possible case is around a 50 percentile chance of occurring, which is really what we want to be looking at. But let's go ahead and scale back down to 1% for 12 months. And as you guys can see, I'm expecting around a 17% return for my most possible scenario. And I know 20% a year doesn't sound sexy, but a system that can survive a lifetime beats a system that you're only trading for 3 months and completely give up on. And again, the edge isn't the strategies, executing something boring long enough for probability to eventually pay you dividends in the end. But again, that pretty much wraps it in for this data deep dive. This is a system I'm actually planning to deploy capital on in the future. In fact, just making an EA to make all the decisions for me. So that way this thing can run on autopilot, exercise my capital, and compound while I sleep. Anyway, I hope you enjoyed this data breakdown. I'll see you in the next video.